Hello guys, this is Pojita Harijan. I will be uploading CA interviews with detailed explanation and solving it completely. So please do like, share, comment and subscribe to my channel, and because that keeps me motivated to do more videos. Thank you guys. Please don't forget to see the bonus tip which is given at the last of this video. Today I'll discuss about various liquidity ratios. Current ratio, current ratio. Second one is quick ratio, quick ratio. Third is this quick ratio can also be called as acid test ratio, acid test ratio. Third is cash ratio or absolute liquidity ratio, liquidity ratio. Fourth one will be basic defense interval or interval measure ratio. Fifth one is net working capital ratio. So each of this we'll discuss in detail. The first one is current ratio. Current ratio. Current ratio is equal to current assets divided by current liabilities. What it tells is, do you have sufficient current assets to meet your current liabilities? Basically, it derives the liquidity ratio of your firm. Here the current assets would be inventories, sundry debtors, cash and bank balances, receivables, loans and advances, disposable investments and other current assets. And the current liability includes creditors, then short-term loans, bank overdraft, cash credit, outstanding expenses, provision for taxation, proposed dividend, unclaimed dividend or other current liabilities. The second one is quick ratio. Quick ratio is equal to quick assets divided by current liabilities. So here quick assets will be current assets minus inventories, inventories minus prepaid expenses. Here quick assets is equal to current assets without including the inventories or stock and without including the prepaid expenses. Okay, it will be the quick assets, and the current liabilities is same. So basically what it indicates is how much readily available cash is quickly available with you. The third one is cash ratio or absolute liquidity ratio. So this is equal to cash and bank balances, cash and bank balances plus marketable securities, marketable securities divided by current liabilities. And in the place of marketable securities, you can also replace the current investments. You can write both marketable securities. If marketable securities is not given, you can write current investments. Both is Okay. So this cash ratio tells absolutely what cash is in our hand. That is called as cash ratio or absolute cash ratio, absolute liquidity ratio. The next fourth one is basic defense interval or interval measure. It is equal to cash and bank balance, cash and bank balances plus marketable securities divided by operating expenses plus number of days, or there's another formula, current assets minus inventories divided by daily operating expenses. To find out daily operating expenses, they have given the formula COGS. This is cost of goods sold plus selling and administration expenses and other expenses and other general expenses minus depreciation and other non-cash expenses divided by number of days in a year. So what this indicates is, if at all a company ceases, how many days can the company sustain with the cash available without going for additional financing. That ratio is this. And the fifth ratio is net working capital ratio. This is equal to current assets minus current liabilities excluding short-term bank borrowing. This is the bonus step, and this I have used it personally and I was shocked by seeing the results. It was awesome. So just read loudly these ratios for 10 times, and the 11th time you will be automatically able to tell the formula. Also take a picture of this or write it down and paste it in the place where you sit to study. Every time you sit to study, you have to read that formula. Make a habit of that and it will really help you a lot. And this is a good experience which I've got and I've shared it to you. Also watch my costing videos with detailed explanation. All illustrations have been solved and posted. I'll provide the link in the description. Please like, share, comment and subscribe to my channel and press the bell icon for more videos.